Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Wednesday, January the 17th. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in this live go-to session to take a look at the market, macro and micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses, two main hypotheses based on what the auction should look like depending on who's in control, and then two alternative hypotheses, which are our expansion hypotheses, where we see the market go into price discovery, break out of balance. Nobody knows what the market's going to do, therefore we have to wait and see what the market shows us, have our hypotheses in place, determine what is best, what plan best suits the market, and then execute on that plan. Yesterday was a perfect example of why we create alternative hypotheses. So let's take a look at yesterday. Oh, wait a minute. First of all, let's get the disclaimer out of the way. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So taking a look at yesterday, come on. Yesterday, we are opening again with a big gap. This is Friday's profile. This is the holiday profile. I don't scrub my profiles because I think it's important to understand what happened in the holiday. You can see we came down here and basically traded through the holiday session several times before they gave it up, and then got the continuation and the break inside of Fridays. But we were opening up with a very big gap. There was like 13.5 point gap thereabouts, approximately 13, and the likelihood or the probability of closing that gap was only about 18%. It was a very low probability gap, but that's the way this market has been. It's hitting low probabilities because it's auctioning very strangely. I mean, of course, we had 10 sessions, 10 days of total up move in 2018. Every day was a green bar except for yesterday. And so our main hypothesis was same hypothesis that we had. We had a Globex high that had been put in, which was also an unadjusted all-time high at 2803.50. So our main hypothesis was an open auction out of range. Hypo 1 was a move down into the 96 to 94.50, and then base and start working our way up and taking out that Globex all-time high and moving up and continuing the trend up. Hypo 2 was an open auction out of range and a move up to take out the overnight high, false breakout, and then rotate down into the main body of the Friday session, come down and close the naked VPOC that we had from Friday that was at 2783 base, and then start working our way up and closing somewhere around 94.50. Hypo 3 was a gap and go. I mean, we've had so many gap days. That was a good possibility, an open drive or open test drive, failure to get inside of Fridays, and just a continuation of the auction up and going up and testing our daily ATR up at 9.25, and that rule of 10 up at 2810. And then Hypo 4 was a failure to take out the overnight high or a false breakout, and then a take back day and a move down with the target. The main target on that was the single. And you can go watch the video from yesterday. We talked about two singles. We had a single down at 27.77.75 and the 27.66, and we were looking to target that 27.75 and possibly even get a push down into that 73 50. And basically, this is what we got. It looked like it was going to be either a hypo 2 or a hypo 3, because it was, a driving characteristic up into taking out the overnight high, and then it rolled over. And it got down inside of the prior Friday. It bounced the first time it got there, and then it broke back in. And that's where, we were talking about the fact that the context was changing in the live trade room, and we were looking at that 90-50 here. We were looking for that to come down and get broken and push down into the 83, at which time we are below the daily downside ATR, and we are looking for that continuation down in trip through value, and it moved down to that 77, and they pushed it a little bit lower down into the 70, tested the low of Friday. We basically came down and closed that gap that was down in this area, and then what did the buyers do? Stepped in and rotated us back up into value in that 83. And since then, we've moved up even higher. We're trading right now at 93 and a quarter. We're actually just put in a new Globex high at 93.50. I mean, that's 20, roughly 25 points, above the low from yesterday. So the buy the dip buyers stepped in, and we continue up. Taking a look at the news. The news today, we've got, we just had Red Book at 8:55. That came out a little bit worse than expected. But in 16 minutes, we've got industrial production and capacity utilization and manufacturing production. But the big news today is going to be the 10 o'clock Bank of Canada monetary policy announcement and the interest rate decision. And we're expected to raise the rate to 1.25, so a quarter point rate increase. And we also have the NAHB housing market. But I really think it's going to be the Canadian interest rate, because this should also lead to a rate increase if we get it in the U.S. as well. 2 o'clock, we've got Beige Book, and then 3 o'clock, we've got Chicago Fed Evans speaking, and then we've got Kaplan speaking at 3:15, and that's about it for the news today. Taking a look at I always like to start my day looking at a simple candlestick chart. I use a 9 EMA and a 20 SMA. I'd like to start with a monthly and work my way down. What I'm looking for is, where are we within the trend? Do we have good slope, good separation? Are we coming down and challenging the trend by moving to the 9, or breaking the trend and seeing a possible trend change by breaking the 20? You can see we're in this incredible 13-month one time framing up, and nowhere near to challenging the trend on the monthly. On the weekly, again, same thing. You've got good slope, good separation. We don't even challenge the trend until we get down to the low 2700s. Going to the intraday, I was just setting these. Let's just go right to the 60-minute. The 60-minute, you can see that we did get a breakdown, and we're below the 9 and the 20. It looked like we're going to get a downward trend, and then they came back and brought it back up, and we're currently back above. There is a naked cross on the 60-minute at 97.50. When you go to even lower time frames on the 30-minute, we've got one at 2,800 and a quarter. These are like naked VPOCs. They have a tendency to get retested. So just we've got a weak high at that 2808.50 all-time high that we put in yesterday. It was not an excessive top. So as we can, we still have repair to do up there. We're likely to balance out in this area and go sideways right now around that 94, and I'm expecting a possible microcomposite VPOC shift there. Going to the 15-minute. Again, back into an upward trend mode. We're basically stair-stepping up and holding the 9 since we got back above it. And again, there's a naked VPOC up here, or a naked cross, I should say, up here at 2801.50 area. And just one more 5-minute, you can see the sideways consolidation that we're seeing right now, but we're holding above the 9 and the 20 now that we're back above it. So the trend is still intact. This down day that we had yesterday, we simply came down and tested through Friday, but we're unable to get below Friday and get the continuation back towards the balance that we broke out of. And now we're trading up here where we were trading in the holiday session and our VPOC from the holiday session, which was at 94.50. And I'll be watching, today. I'll be adding today's candle in and watching to see if we get a microcomposite VPOC shift from what is currently down here at the 83 up to the 94.50. And then when that happens, we're accepting value higher. And then we have to see if it's the buyer stepping in to hold that value or it's the seller stepping in to resist going higher. But if we can get above the 94.50 with a shift, then that would confirm a move up towards testing that 2800 and possibly going and repairing the auction. If we don't get the shift and we do not hold the 89, I'm actually watching the 88 because that's the LVN from yesterday. If we get below that, then I'm looking for a move back into the 83, and it would be the 83 that becomes the most accepted. It is right now, but it's only 2 days. You can't include the holiday session, and we're looking to see if this shifts up or if it holds, and how we handle that 88 price. So, in terms of levels, we're likely to put in a new overnight high, but right now our overnight low is down at the 79, which is basically a couple ticks above the VPOC that shifted down from the 93 area down late in the day. You can see that this is a very blunt area up here. It is not an excessive. It doesn't have a 45-degree profile. It's blunt, which means that there's two-sided trading up here and creates a weak all-time high. We still have a measured move up here at the 28.13. So right now, I've got to put it in, but we're likely to extend it at the 93.50, which is basically one tick below where that VPOC was for a good portion of the day. And here we are trying to expand right now, so we'll have to be on the fly. Our 20-period daily ATR full session average true range is running at 1841 right now. So off of the low overnight of 2779 plus the 1841, our upside daily ATR target is 2797.50. We're just putting in new highs again here. 97.50. And off of the current high, which is likely to shift, 2793.75 minus the 1841. Our downside daily ATR is down at 75. 75 and a quarter to be exact. Okay, so we have a triple distribution from overnight. Our first one right here is at the 90.50. Now we've got the VWAP at the 90. The most important over and underline though is going to be right here at the 88. So I'm going to put this in, above it. We're looking for a move to test the middle distribution from yesterday and a move up to test the value. The value area isn't really that important to us simply because of the fact that we were in a trend mode yesterday once we broke down. So value is really not found. We found buyers, but value is not being established, and we're likely to chop in this area and probably visit both sides of the HVNs above and below this 88. There is another LVN down here from overnight down at the 86, but again, it's the 88. I'm going to be targeting the 84.75 below. That's my first target below the 88. And of course, the naked close at 83 and a quarter, and then a move down into the overnight low and into yesterday's VPOC if we get below the 88. Above us right now, we've got the range high that was the holiday sessions high. I'm going to be paying attention to that, not so much because it's near the value area high, but simply because it's the prior holiday session high. And if we break them out there, we're likely to go and hit those naked VPOCs that we've got above at 97.75, 2,800 and a quarter. Of course, our open yesterday was 2,800. We've got naked crosses up there, so that's going to be the target on the breakout of the it's going to be 2,800 even. Breakout above the 96 area. I'm looking for a push up there. And then, of course, we've got that week high up here at the 808.50. You'll probably want to scale at the 275 and the 5 and a quarter. And then below us, once we get down below the overnight low and the VPOC, we're going to be watching the 76.50 and a break below that, looking for a push down to test the low and the 70 area down here, the 69 and a quarter. And anything below that, we're expecting a bigger move down. I don't think that that's likely to happen today. I think we're more likely to see balance and buying coming in at opportunities. So our overnight high just shifted up to 94 and a quarter. So, this is a rare occasion. We're actually going to be opening up inside of a of a prior day range. We haven't had that in a few days. So I'm looking for an open auction in range. I'm looking for a push down towards this 88, and then I'm looking for buyers to step in somewhere between 88, okay, and it's a pretty big range down to the 78. But the first spot I'll be looking for buyers to step in is 88. If they don't, then we're likely to take a trip through to the HVN of the lower distribution. So that being said, my Hypo 1's got a large buying range because we are seeing some selling, so it's difficult. So I have to play off the 88, and if we get below the 88, I'll be expecting a bigger push. But Hypo 1 is open auction in range in value, a move down, responsive selling down into the 88, down to the 78, somewhere in here. I'm looking for them to base, chop around, and push up again towards the 2770, 2797 area to 2800, and challenge the 2800, whether we actually get inside it or not. But I'm expecting to close somewhere in here in this upper distribution around the 93, 94 area. And I'm not expecting a whole lot of range today, even though our ATR is expanding. Hypo 2 is an open auction in range, a push up into testing the 2800, taking out those naked VPOCs, naked crosses, but failing to hold the 2800, rotating down into the 88, chopping in the 88, pushing down into the 79 area, and then chopping and going sideways and closing somewhere in around the 83 area. That is hypo 2. Because we have seen some selling coming in yesterday, my hypo 3 and hypo 4, which are my expansion, are going to flip. My hypo 3 is going to be an open auction in range, a push up into the 2800, fail to hold the 2800s, rotate down to the 78, chop, and then fail and push down and come down into the 64 area and continue the move down and possibly start a downward trend down into some repair work that we've got a lot of below us. And then hypo 4 is an open auction in range, failure to break below the 88 and take out the naked close, push up into the 2800, chop in this area, and get a sideways day with a late day probe into new all-time highs and pushing up towards the 13, 15 area, possibly even into the 20s. And then the fifth alternative is a very tight range, and we basically chop inside of this distribution and create balance around that 93, 94 area, and basically chop between 2800 and the 2788, and getting a consolidation day sideways. So that's my hypos for the ES. Gold again, we talked about creating some value up here now that we've hit our primary targets that were in the 32 area, and we pushed up into the 45. We're going to be watching the 40 area, the 39, 40 area. Any break above that, I'm looking for a move to test the 42 area, which is the value area high, and the 45, and any breakout up into the 50s, 1350 area. If we don't hold the 35 area, then we're likely to try to come down a little bit lower and test the lower side of this distribution down around the 1331, 1330 area. And any break below, the main target is going to be that 27, with 25 being important. Anything below 25, a move back down into the balance that we just broke out of in that 16 to 18 area. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.